Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table.
You can reach us at 855-226-8551 or info@yourmoneyontap.com. My name's Seth Krussman, and sitting here across from me, it's kind of what it looks like, is Benjamin Brayshaw. How you doing today, buddy?
Good, bud. How are you doing? I'm excited to be on the radio. You know what? Dan and Tony aren't with us. It's just you and I today, and I want to rock it out, man. Let's bring the show back to what it needs to be. Just teasing them. They're probably going to listen to this episode and be like, why would you say that?
Right. Yeah. Well, our apologies to friends and family right out of the gate. We do love them, and they're definitely a part of what we are doing here at Money on Tap and Brayshaw Financial Group. If you're new to Money on Tap, well, welcome. We're glad to have you aboard. Hopefully what you have today is an experience of some fun, learning about, financial planning from financial planners and, what's important to us. And I think the topic is going to be, it's timely. And I think everybody's going to be able to relate somehow or another to what we're talking about. What are we talking about, Ben?
Seth, today I think this is as timely as it gets, right? Back to school is right around the corner. And a lot of people ask us, how do you invest in back to school? How do you take advantage of that? And there's kind of some obvious ones. I think there's some not so obvious. And because we can't really throw out recommendations, we can look at articles that, specifically talk about that. So we're going to kind of have a generic conversation around that, but we're going to bring in some specific companies that this article is talking about and talk about pros and cons and try to figure out where some of the risks are. I want to talk about, kind of some of the obvious ones that I think, maybe now's not really the right time to be considering based on how they're evaluated and, ratios and so forth. So I think that's a good conversation, but I think it's a really good conversation to understand what kind of money's moving in that direction and how that's going to impact a number of these companies, no matter where you do your school shopping and what kind of shopping that is. And I think, Seth, one of the unique pieces is we're going to talk a little bit about kind of this hybrid environment that a lot of areas, throughout our country are actually, and even the globe, are looking at doing this coming year. I mean, there's a huge surge going back to school, but that's not everybody, and not everybody's going back to full time. And so how do you play that differently? I think that's going to be an interesting conversation.
It is interesting. And one of the first things I want to highlight there about what you said is that we're talking about investing, and investing does involve risk, right? So we there's some of these things that we'll talk about that we would, buy, for ourselves or for our clients. And maybe we do have some of these ideas in our portfolios, maybe have in the past or maybe don't currently. But for the most part, big picture, we want to be investing for the long term. We'll kind of get that out there first and foremost. And that, investing does involve risk, but it will be fun. And speaking of fun, I think it is time for Money in the News.
Well, Seth, this couldn't be more timely than it is today. We are doing an article by probably one of my least favorite reporting organizations on the globe. It's not the worst, but it is definitely on the bottom of my list. It's CNN Business. But, this is all about home prices can't go straight up forever, but this probably isn't the bubble. This was written by Matt Egan by CNN Business, as I mentioned. And, there's a lot of people talking about this real estate bubble. A lot of people are afraid, I'm buying a home or I'm moving out of the city. I mean, how many people do we know are moving out of the city saying, I don't want to live in my apartment anymore. I don't want to be, stuck in a room that, I was talking to a guy today who lives in Brooklyn, and he was telling me that him his wife and their 2-year-old were stuck in a 1-bedroom apartment. They, were planning. I mean, it was a 2-year-old, so it was 6 months old, the child, when the whole kind of thing went down. And then, they're.
How could you have even planned for that? People that have been living in the city for years even never would have thought that their perspective would have changed to anything other than this is where I want to live, because it was a lifestyle. It was what they loved. It's what attracted them to be where they are. And that's typically the way we move, unless it's a job relocation or something like that moves us along. The housing situation is completely different than it's ever been.
And they're both working from home. I mean, that is the crisis of millions of people in New York City. Yeah. I mean, in every city
passing
around
the football, right? Here,
oh,
your
yeah.
turn.
Yeah, they're passing the football in a 1-bedroom apartment, 2 people and probably a 6-month-old. They were probably considering an upgrade to a 2-bedroom and were kicking their pants. They ended up buying a house in Jersey. I mean, it was I felt bad for the guy, but he's like, yeah, we had to get out of the city. He's like,
oh yeah.
I was like, man, that's a life experience right there. And so, this is what's sending these houses skyrocketing, right? I mean, there's a lot of, in part, but I think this is a big driver. I mean, there's kind of I got to get out of the city. And then there's the kind of realize like, hey, we got Delta variant and we're going to have whatever variant behind that. And 10 other things. And I think people are saying, I kind of want a different lifestyle.
So the first line of this article says home prices are climbing at the fastest pace in history. And then the other side of this is, well, are we in another bubble? Because those two things could have some correlation there. When we see the home prices rising as quickly as they are, how long is that sustainable? And what I think for a lot of people in this situation is understanding first and foremost, if you're even able to buy real estate with what people are pretty much demanding up front, which depends on the market that you're in, but just Raleigh was one of them that I was taking a look at the other day, and shout out to our clients and friends in Raleigh. It's considerable what people are needing to come to the table with as far as just cash, and how they do real estate in Raleigh is you write a check and it's non-refundable as far as your upfront earnest money. You got skin in the game, but people are looking at like $20, $30, $70, $100,000 non-refundable. Of course, there's laws to protect those people, so it's not like they can just cash the check and move on, but those are the kind of that's the buying situation if you're purchasing in that market. And what are some of the differences if we were to take a look from 07 to 09, when we experienced a catastrophic collapse in the housing market? There are some significant significant differences in this market comparative to that market. So, kind of all baked into this article is this idea that it isn't the same. And there's some reasons why. We'll talk about those in just a minute. But also, why? Why is this market maybe not sustainable at the 20% increase year over year? But what we can kind of expect in possibly the near future.
Seth, I mean, people are paying cash. I mean, you're talking about big, solid deposits, but people are walking in saying, here's $1 million in cash, and they've made it in the market or they've liquidated something. But people are saying, everything else about the future doesn't matter. The current situation, I'm curious, Seth, there was a huge surge in multifamily, city life living. You could name it San Antonio, Nashville. I mean, Denver. I mean, they're huge. And honestly, these places look like college dormitories that were advanced at, they're gorgeous. They're A+ rated, stainless steel, this, you go downstairs, there's a community pool, there's bars, there's restaurants. They're all right there in the building. You don't even leave the building. And you Uber if you're going out to the city, or you take the train. And it was a very convenient, very, appealing lifestyle. But then these organizations started shutting down everything inside. So they weren't spending any money. They're still mostly tech jobs, and now these people are saying, that lifestyle, I just don't want to be stuck in a room by myself again for 9 months, And so I'm curious how many of these people are just liquidating 401ks and just walking in saying the only way I'm going to get this house is to pay cash. So, buyers are looking at that. But I think what's interesting is, there's a lot of people out there that, are saying this is a bubble. And then there's this article actually is somewhat interesting because it goes into the idea that this may not be a bubble, that the actual building trends are actually down year over year. When when you look at, they were building 2 million homes a year, 50, 100 years ago, we're only building 1.6 million homes a year.
Yeah, the inventory is one of those pieces that's pretty significant here in comparison to the 08 season period, where there was just a lot of builders that were just continuing to build. And so there was a huge amount of new home inventory. Alongside of that, there was people that were buying home after home after home without any backing. They called them ninja loans at that time. It was you had a credit score, you had a pulse, and here you go.
Yeah, Seth, these ninja loans, people don't understand, you don't have anything and the bank's still going to loan it to you.
Right.
And some of them were interest only, or they were loaning more than the house so you could fix the house up. But there's no justification that the house would be worth more if fixed up.
I remember one of these programs was called like a Power ARM, adjustable rate mortgage is what an ARM stands for. And it was basically you get your mortgage and you have 3 or 4 different payment options. You can just, do the 30-year fixed based off the interest. You can do the interest only, or you can do the 1.3% where that interest between, your 7% loan and that 1.3 just continues to accrue on top. So there was this
wasn't even
huge amount of flexibility.
It wasn't even an interest only. It was like interest partially.
Right. So those kind of programs they don't exist. So the lending today is in a much stronger position, as well as the inventory being in a much stronger position as well. So those were. Oh, as well, I'm thinking about the adjustable rate mortgages with those prepayment penalties that the subprime market used to love to give aren't coming due, and now the interest rate is prime plus 8 or whatever that used to be, where people just are no longer, they're priced out of their own house and they can't even afford those places.
Well, and to wrap this article up a little bit, to give people a perspective, 21%, according to this article, in 2006 were basically interest only, very expensive mortgages, that were adjustable rate. 21% in 2006 is an astronomical number. It's down to 2% now. And
I was going to say, who in their right mind is even doing an adjustable rate mortgage these days with 30-year loans?
Yeah, at all-time lows. Yeah, no, right. There's no reason to even consider that. But that the whole point is that those adjustable rate mortgages. Yeah. There was no basis then that theoretically we were going to go down to these interest rates. And, some of those people lucked out, but the people who really bought those couldn't afford the mortgage to begin with in any capacity. And the math said that. And that's why some of these hedge fund companies knew this was going to happen and made a ton of money when the whole market did crash. There's a couple movies out there on that. So, do I think it's going to be a bubble? I do think there's going to be some pullback in real estate. I do. I think I think the couple of years we got, people will settle into one version or another. They'll find their long-term potential future COVID location and they'll be good with it. But I would tell you that if you're buying real estate or investing in real estate, which is one of our upcoming shows that we're going to be doing here soon, it is a high point in the market. So how do you combat that? And that would only keep, listeners tuning into our next few shows, because that's coming down the road. But next on our list, Seth, we have from Advisor Hub, banks are giving the ultra rich cheap loans to fund their lifestyle. Now, it's so super funny that this article is on our list, because I listened to Elizabeth Warren on CNBC, and she was just bashing this going on in our country. And basically, for our listeners, the ultra rich sometimes are very rich based on their stock, the asset of the company they own. Like you look about Zuckerberg and how much he's worth because of his Facebook stock. That doesn't mean he has a ton of money sitting in cash necessarily. Well, some of these kind of just became super wealthy people out there who are worth, $1 billion, they can't liquidate their stock. They need to either maintain a piece of ownership or whatever, and they've got their income from their company. So they go to the bank and they say, hey, here's my $1 billion worth of stock. Can you give me a $100 million loan? And they do. And guess what? They don't pay any taxes on that loan. And that's what Elizabeth Warren's upset about. And, for some people, they're like, yeah, well, why aren't they paying taxes on it? Well, they haven't realized the gain. They're borrowing against an asset. It's kind of like if you did a home equity line of credit on a home that you owned outright and you take $100,000 out, you're not going to pay taxes on that, but you got to make money to pay that back. And those are the taxes you are going to pay.
One of the other influences here that's it's fairly significant is the borrowing rate today. And when letting go of an asset that, is in the billions of dollars or whatever it is, and let's just say it's appreciating on average 10% and you're borrowing at, 3%. Well, would it make sense to let go of an asset that's appreciating at that rate or to go over here and borrow money at a significantly lower rate?
Yeah, and I mean, that's what people don't understand is the value and the time value of money, which comes into play here. These banks are making money, lending the money out. The person who owns the stock is growing at a, whatever rate they're growing at. In the last few years, it's been considerable. And the banks are making a ton of money on this. I mean, Morgan Stanley alone, it says Morgan Stanley's tailored and securities-based lending portfolio approached $76 billion. That's B as in boy, $1 billion last quarter, a 43% increase from a year earlier. Bank of America reported a $67 billion balance on such loans, up to more than 20% year over year. I mean, bank, and then the article goes on, bank after bank after bank is up. And Congress is trying to figure out how do we get some of this money? And the truth is that when the money does exit, when they do sell stock, when they, those will be capital gain events for them. I mean, at some point in time, the money's going to hit. It's just Congress wants it sooner. And I mean, honestly, CNBC, which is a super liberal station. If you don't know that, be careful. But it's a super liberal station. But they have one guy who was like on there and he was bashing Elizabeth Warren right to her, saying, but what happens if I lose money on that stock next year? What if I happen to need money and I can't sell it because I have to own a percentage of my company, and then all of a sudden it drops 50% next year because someone does, it's going through a boom or bust. Do I get my taxes back? It's a great point. He goes, I never realized the gain. I still got to pay the loan. I never actually got the money from that stock, and she really bumbled around that. It was pretty funny watching it.
Folks, you are listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And we're going to be talking about back to school. There's opportunity, there's risk.
There's people out there that are cheering and they can't wait for the kids to get out of the house. That's the biggest win ever.
We're going to take a quick break and we'll be right back. You're listening to Money on Tap. Folks, we have a lot of fun doing this show, Money on Tap, and Ben and I have been financial planners for years and years, and our goal here with you is to bring you into the room, have the conversations that we have. We think these are critical conversations for you, but we understand this is a limited space, and what we'd love to do is to open the doors to you with us at Brayshaw Financial Group, so you could experience what it means to have three-dimensional planning in your life. Let's take a look at all sides of your situation, your scenario, and see how we can put together the best plan possible taking into account your risk. How much can you have in the market? How much do we need to have set aside and doing different things for your life? That's what we do as planners, how we engage with you, and we welcome you to do that with us. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Now, if you have $250,000 that are investable assets today, our planning is free to you. We want you to have the playbook to have a successful experience in retirement. Give us a call, 855-226-8551 or info@yourmoneyontap.com. Ben and I welcome you to Brayshaw Financial for complete wealth management.
Now back to Money on Tap with Ben and Seth.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And, you know, it's worth mentioning out there, if you are in the podcast world, if that's how you're capturing us, we appreciate the listens. We appreciate the likes. All that stuff helps other people become aware of Money on Tap and how they can get caught up on the latest news and the best information of financial planning that is available out there today.
Yeah, Seth. I mean, if you're listening to us, subscribe. We love to have you listen. Tell people about us. We're really happy to provide a lot of really great free information for people. We got some great guests. We got some great partners here at Brayshaw Financial. We got offices coast to coast, and people able to help and walk you through the planning process. You know, Seth, as we jump into this topic today, this is a very interesting topic because a lot of people call us and ask, hey, what do you guys think is interesting to invest in? Or what's kind of the hot thing that people are looking at? And, back to school is kind of right around the corner. And, people are looking at that. And we found a number of articles on where people, where organizations are investing and what they're doing and what companies are really focusing on the school side and what they're actually, some companies are like, they have been stocking up. I thought that was really an interesting piece. Companies have been stocking up on back to school stuff because supply chains have been so complicated. What an interesting, here's somebody foreshadowing a pandemic follow-up crisis that's going to exist. So if you haven't done your back to school shopping and you're listening to this show, finish listening to the show and then go out and go shopping.
Honestly, as we were putting this together, I had the realization, oh my gosh, yeah, this is right around the corner. And I don't typically get out there and do the shopping in August. I guess that's pretty popular time frame, but I'm kind of more of a last minute. Oh, what does the kid need? Oh yeah, okay, let's go grab that. What is the teacher's supply list? Okay, we're here anyways. Might as well get it.
They need what?
Yeah. And so many things have changed, and I think this is an interesting look back because over last year and the year before, and now we're kind of in a bit of a catch up here. Speaking of, I was noticing that the Olympics, if you've been watching the Olympics, has a 2020 on it. And we were asking, Kira and I were asking, is the Olympics going to be in 3 years or 4 years? And as we looked at the screen and we're watching diving or something like that, we realized, it says 2020 on it. And anyways, it's just a very strange period. And so we have some things that have happened over the last year because, nobody was getting out and school shopping last year. Everybody was online. And are those still, some of the fundamentally sound investments for people to be looking at? Or is there something in the supply chain like Ben was talking about that's going to be challenging this? Well, and also what are the hot things out there right now? What has changed? And right out of the gate, I thought one of the more interesting pieces was technology. Shoes and clothes and style, those things are, still, apparent and critical depending on the age of your student. But even more than that, what seems to be the go-to as far as statement is the technology.
Yeah.
And do you have the latest Apple product?
The technology upgrade conversation is huge. I mean, people are talking about that across the board. I think about the technology upgrade, and I think this has to do more with the fear of the hybrid solution. People think, hey, our kids do need a laptop or they do need this. And we had how many parents out there listening said they pulled out an old laptop they had from work or somewhere else and started doing Zoom on it, because their 10-year-old or 5-year-old or whatever is, unable to, they didn't have something for them. I mean, they might have had an iPad.
After if it is a laptop, and our experience was that we had to go through a tremendous amount of updates. I think the laptop took almost a day just to do the updates to be able to manage the software that the school was using.
Yeah, I think people are saying to themselves, because you go school to school to school, and as many of them as feel comfortable are trying to open. Probably in, most of the red states, you're seeing a lot of opening. Blue states, you're seeing a lot less opening or hybrid opening or no opening at all still. And so, I hate to break it down to a political scenario, but that is the trend that we're seeing. And, so be prepared. And what people are saying is that they're like, I'm going to buy a machine, something that will run and work for my child at school. But if for any reason tomorrow we shut down, they're fully prepared to go, because my employer wants me back to work. Like, there is no exception. Like, we have to. JP Morgan, we mentioned that, has a demand. Like, we're going to stop paying you if you don't come back. They know productivity is down. The financial industry, productivity drops tremendously when you're not in an office. And every bank out there knows that. So now there's some cultures, some organizations that doesn't matter. So I think the tech side is huge. But, when you get into the tech side, the obvious items that are coming out of, like, there's thestreet.com and so forth. And that article had a number of stocks out there. Obviously, Walmart, Target, Staples. These are where people go to get the basic supplies. What I thought was interesting in this article, 8 back to school stocks for an A+ portfolio, as it's titled, by Brian Zozzi. What's interesting is they mention Apple, obviously, as a big player in the space. But I look at Apple and I don't really think it's a great buy right now. It's 28 times earnings. It's, normally Apple, and you can find revenue companies that are trading like, lower than that is more in line with that 18 to 20 that Apple usually is considered a buy rating at. So as we talk about, companies like Apple and, where are they a buy or not a buy? Honestly, I would say at best it's a hold right now. I don't know. Apple could skyrocket just because, some investment fund, hedge fund manager wants to buy it. But based on its traditional buy pattern, it's way above, that earnings ratio. So, and now, that's stuff that I look at like the statistical sides of that. And I do think there's that piece, but there's another piece to this technology world that no one's talking about on a grand scale. But, everyone might want a new machine for their kid. But the truth is there may not be enough, microchips to make them. And that's a big, big problem. Like, so then the question is, well, now we got inflation. So I'll turn that over to you. I know you had some things.
Yeah. I think we're kind of getting a little ahead of ourselves. Those are some of the points that we definitely want to get into for sure. And so you did a great job foreshadowing where we're going to be heading with the rest of this show. I wanted to actually just talk about some more of these tickers that are out there and some of the ideas that people are going to be investing in or have been investing in. And again, we're not making any recommendations with these. It's off an article.
There's a number of these, and I would tell you, buyer beware, because you may be late to the show on a lot of these, and I wouldn't tell you to buy any of them today. But you're right, Seth. I mean, we're just going through the article, so.
Yeah, and I think that's one of the first ideas that is interesting about what this article is saying, is that when you think of like the back to school and what are people going to be doing, is it Amazon, is it Walmart, which now is has more of an online presence, is it Target, is it Staples? Those are kind of the let's go get our markers and our backpacks, and
that's where everyone goes for this stuff. Yeah, I mean,
right. But if you take a look at just these stocks in general, put them together as a whole, they're retailers, and retail is consistently a cyclical kind of a trade with the traders, right? With the people that are actively buying and selling these. Now there's the idea of I want to buy something and hold it, and that's a long-term investor, and that's one way to approach this. But in terms of the cyclical tradings, a lot of the buying has already happened. And if you were to take a look at Walmart's chart today, it's nothing right now that I would take a look at and say, well, I got to own that.
Yeah.
But there's also another part of the cyclical retail trade, which is the holidays. And so people, as they're looking to purchase and get into and sell these in the short term, those are the seasons where people are going to be typically be picking these trades up, and we're looking months ahead of time. It's if you get into the retail season of Thanksgiving and Christmas and you're thinking about picking something like this up, it's done.
Yeah,
market's already moved past it.
I know, and you look at Target, and I'm like, I mean, these are all cyclical retail stocks, and they have a place in almost every season and holiday and everything else. But I mean, Target's only a couple bucks off its high, and it's a couple hundred. It's like $258 a share. So, I mean, I mean, you're talking about you're buying something at an all-time high that in a post-pandemic world where supply chains, and that's where I think when I was referencing early, Seth, that the massive kind of like storage factor that Target and some of these companies have been doing to have supply. These companies know they're not buying stuff. They've been buying stuff. They've been picking up anything they can and shoving it like in storage to have a back to school supply. If you're not going out shopping now, you may already be too late.
It's funny because we how do you buy? Do you buy it when it's at the peak? And if you're going in and purchasing things at Target or Walmart right now, that's exactly what you're doing. Is you're paying a premium today. Now the week after the 4th of July, because we had a ban on all fireworks and all that kind of stuff here. There was just this glut of neon glow in the dark bracelet kind of stuff for people to be.
I thought fireworks spread COVID. That's why we don't do 4th of July anymore.
Yeah, right. Going outside, enjoying the fresh air is bad, people.
Yes.
I walked through Walmart and I walked by a display and it said 10 cents on it. Of course, that gets my attention. I'm like, wait, what's 10 cents anymore? And it was all of these glow in the dark bracelets and, all that kind of stuff from the 4th of July, red, white, and blue. I got to tell you, folks, I now have a bin in my garage that it's dedicated to a lot of bracelets and glow in the dark stuff, because that's what the kids, I can't keep them out of it. And they have so much fun with it. So idea is, right, let's buy it on sale. And right now, it's not on sale. Maybe there's a little bit of stuff in here that you can pick up and hold on to that might be a good buy today. But we're gonna talk about a few of the other things or the other ideas here as we're talking about what's hot. So it's the school, right? It's the school thing, and a lot of people don't realize that Rubbermaid is actually one of those companies out there.
Huge user of school supply stuff. I mean, Rubbermaid always seems to be a winner in the school supply world. That's for sure. They're up 14% year to date, and you may miss that boat too. I mean, I think the thing
this is a horrible show. Now that we're in it,
no. I mean, hey, listen. You know what? We could be wrong on all of these, but what I would tell you is that with inflation, some of these stocks are inflating because of that. Some are inflating because of just demand. They're starting to sell stuff for more. Like,
Yeah.
like supply and demand. It's like, hey, people need this stuff, raise it $20. We're not going to have enough to sell later on anyways. So there's that concern that's really driving a lot of this. I think what's really kind of funny, I was just thinking about this as you were talking about the teachers and their supply. I mean, my wife, every time she gets a supply list from the teachers, she's like, do they really need me and, 30 other people in the classroom to provide a box of tissues?
Well, when they run out in the middle of the year and you start getting the second ask for those things, then yeah.
Yeah, they do. But I mean, it's the same conversation every year, and they need.
Oh, I just had an idea.
They need. Go ahead.
I just had a realization. They are not going to have to ask you for tissues anymore, because if there's even the hint of a cold or runny nose, guess what? Staying home, kids.
Yeah.
Just gonna tie into it that way. General Mills, did you ever think that was a back to school buy?
I did not. Think that they would throw that on there. Yeah, well,
Starbucks.
Let me jump. Let me jump back on this. So,
All right.
if there's a pandemic supply shortage, post-pandemic supply shortage, then when the teacher gives you the list of 50 items, I mean, honestly, some of these lists are long. I mean, I've seen, and not only that, but I got 4 kids, so the lists are like 4 of them. So
They don't give you a discount on that, do they?
No, they don't. But you know what? I'm just going to tell my wife, listen, if you can't find it, you just say, listen, they're out. Because they were out. I mean, it's a post-pandemic supply chain shortage. What do you want me to do about that? So it gives some parents some excuses to get out of the fact that, if I shop late, you're not going to have it and you can't get it. So it is what it is.
So a few of the other ideas here are, as we kind of round out, what are these tickers and what are the companies? There was the General Mills, because cereal, now every kid's going to be they're not going to have time to do the eggs that they have in the morning, like, we've tried to do. But yeah, the quick grab is going to be the lunches, the Lay's potato chips. And
you mentioned Starbucks, that Starbucks is at an all-time ridiculous high. I mean, that's crazy. Yeah. But you look at that. I mean, these companies are all having blowout earnings, which is fantastic for stocks. But these, we have a huge surge of activity coming. But I think you think about the shoes. What about the shoelace companies? What about the you name it, there's a whole article that we read. I don't even think we're referencing it in this one. I can't. But people are saying that because they didn't spend money on back to school, that they're going to deck themselves out to the nines and really, like buying school clothes. It's like a whole year. Your kids have grown and yet didn't do the update. So there's going to be some significant increase in clothing sales. I mean, there's a lot of conversation around that. I think that's a very interesting. I mean, if you can find a company that's going to drive that piece, I mean, maybe it's Walmart, maybe it's Target, maybe it's some other clothing store. I don't know. Is it Levi's? But those things are sold everywhere. I have no idea what the kids are buying today.
So what is not going to be a big ticket, or not a big ticket, but there's not a lot of people running out there right now trying to grab these things up, which maybe,
not yet,
just maybe, is something that you want to take a look at, which is the office furniture world and picking up the desks for the stay-at-home people in those investments. I bet you anything right now, it's probably a good time to hit your Facebook Marketplace or wherever you like to go to pick up some of those used items.
Stay-at-home work desks are going to become a real opportunity for sale. People just trying to get them out of their house at some time over the next year or two. But I would tell you that, for companies that are oversold in that space, you know what? I mean, I don't know, this Delta variant, I mean, they said it was up 18%, and then they told me it was 254 deaths. I mean, it's, from 90, whatever it was, So, I mean, there's really no real, from my understanding and everything I've seen, no real serious concern or anything near what COVID originally was. It's not rocket shipping through us and so forth. But if we have a variant, or whether Delta, blossoms off to something much more horrific, those oversold pandemic items are going to be, because people have gotten out of them. They said, hey, the pandemic's over. Let me get into something else. And so everyone starts selling it. There could be an opportunity to go backwards. I mean, especially if we have another variant come out that's dangerous and people are back home and, they never got the desk to begin with, or they need more addition. And the company says, you're home permanently. Here's here's 5 screens and, a desk, and here's an allowance to spend, and because a lot of people were making do, waiting to get out of this.
Sounds like your office, Ben, where, turning it into the stay-at-home school zone or stay-at-work school zone for all the Brayshaw Financial Group.
I know. I think we're definitely going to make some changes if kids are coming back into the office. We're gonna
Headmaster Ben.
Just like anything else, we're gonna advance.
Yeah.
We're gonna advance it like anyone else would. We would say, hey, you know what? We did this. We knew what mistakes happened. We know we need this stuff, and we'll go from there.
Folks, you're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We're talking about the back-to-school trends this week. And when we come back, we're going to be talking more about some supply chain and inflation and what some of those numbers look like. Don't go anywhere. We'll be right back. You're listening to Money on Tap.
For a number of our listeners, they have a lot of questions, and you might be one of them. Today, we're just offering what we call Zoominars, webinars over Zoom meeting rooms, where we have top experts, Social Security, estate planning, and financial planning experts for you to speak with, do a private consultation that way today. We're also having webinar-based Zoominars where we're going to have multiple groups where you can be part of that and enjoy that as well. Give us a call at 855-226-8551 or email us at info@yourmoneyontap.com to schedule your Zoominar.
Now back to Money on Tap with Ben and Seth.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Oh, and podcasts. You know what? We put our information or our podcast on a platform called Spreaker, Spreaker. They do a really good job with getting us posted and distributing our information to every podcast venue out there. And I'm just grateful for that. In case you wondered, we are talking about today what's hot, what's not in the school back to school trending and trades and how things are different today than they were 2 years ago as the newest normal unfolds. It's been an interesting topic for us to just dive into and take a look at some of these these were recommendations from other people. We're just taking a look at different companies and, the supply and demand that's out there for different things around the school scenario. And, it is interesting, I think. We talked about supply chain a little bit in that supply and demand. One of the things that we didn't really get into was what is going on overseas, and that Delta variant out there is what I understand it, the Delta effect or COVID effect on supply chain and manufacturing for Nikes, for instance. I think it's in Singapore or Thailand where they're making different parts of the shoes and manufacturing these. They've actually have closed down some of those plants, due to just safety and precautions of what's going on over there. And these are, it's just another world. It's a totally different world apart from ours that we don't typically think of having the kind of effect that it does on us here. The shoes that I prefer to buy, which, some of those are Nikes, but I guess I probably buy the dad gear, I'm not in Jordans or Jordan Air Ones or whatever they are that my kids would tell you have to have. But it is all about the kids and getting back to school and what they're doing right now. So we're interested in this.
Seth, you're bringing up a really good point on kind of the overall structure. I mean, because, we are such a global society. We're a global economy. When you think about that, we have really created countries that do certain jobs almost. Like they make clothing, or this company makes part of the world makes shoes. And right. Yeah, there's other places that do that. But
China makes our national defense semiconductors.
Yeah, exactly.
And listens into everything that we're doing.
Yeah. So, so when you think about that, if any one of these areas does get hit by a very real illness, or even if it's a perceived illness that they shut down in, trying to mitigate a health crisis, we're instantly out of it. It's done. I mean, because the amount of purchase power we have in the United States, I mean, almost, I heard some ridiculous statistic. It was some enormous percentage of all brand new clothing is purchased in the United States. In the rest of the world, it's all used clothing. We kind of buy it first, and then it just kind of filters its way down through the world. And I was talking to a gentleman at his golf fundraiser, his charitable fundraiser, and he was talking about how, they ship their clothing all over the world. The huge barges. They sort it, organize it, people donate it. The U.S. is one of the biggest donators, but he said that more people throw away their clothing in the U.S. than give it.
This is interesting. You bring this up, and I love how God works like this in my life. This is something that I've heard twice in 1 week from two different sources. Both are very close to me, Benjamin Brayshaw and my wife, Krussman. So I pay attention because Kira was just talking about this. Do not throw away your clothes, because even if it has holes or whatever it is, donate it, because they send it off overseas. They use it in all sorts of different ways, but there's just program upon program to make use of the things that we would probably think here somebody wouldn't even pick up off the rack at Goodwill.
Oh, yeah. No, they literally turn everything. They'll actually take a shirt that's an adult shirt that's tattered or whatever in some of these countries, and they'll sew it into a baby shirt, We've traveled. I mean, I've been to Guatemala a couple times. I've been to Romania a few times. I've been on a number of mission trips, and it's just been interesting because I have seen people make something out of nothing and live with nothing. And so what we think is garbage to them is gold. And so, as we kind of go through, we're so off topic right now, but I didn't mean to do that. But,
yeah,
there's us. But we buy this massive clothing. And if we have these shortages and they catch us off guard, we're in trouble. And you're right, Nike's definitely one of them. Inflation's another big issue here. We have, to put in perspective the investment side of this on a lot of levels, this CNBC article notes that KPMG, which is a huge, financial accounting firm and does all sorts of auditing and everything under the sun, they have estimates out there that people are going to spend as much as $270 per student child, compared to roughly $250, which is up, about, looks about 7.5-8% there. And so that's a sizable increase year over year. But what's really interesting is that they think that parents of children in preschool are planning on spending as much as 32% more this year than last year, and college-age students 13% more. I mean, that's a massive increase. And some of that's inflation, but some of that is just kind of, we didn't spend it last year. We need new stuff this year.
I have a theory on this. Okay. Now, here it goes. So last year, if you had a preschooler, like we did, and the year before they were in preschool, and at the end of their age 3 school, they come home and they start trying to do online school, which if you've ever tried to do online school with a 3-year-old, enough said. Okay. Just good luck if you can get 10 minutes in that session. And so the whole last year, most were doing some kind of an online version. We were fortunate enough to be able to not have to do that, and we're so grateful. But I think the majority, or the vast majority, that had their kids home with them realized the value of what they were getting out of their preschools. And I think there's a little bit of that supply and demand. I think they've kind of got us over a barrel on this, because a 32% increase for preschool is tremendous. And I think we all agree they deserve it.
Yeah.
So there you go.
There's another interesting piece here that has to drive, investment perspective here on a couple things, which I think is interesting, that came out in this article. It says that in this coming year, 57% of those polled expected to browse the aisles in person, compared with only 44% planning on shopping online. When you look at 2019 levels, 34% of respondents said they would buy items like loose leaf paper and backpacks on the web. So, it's kind of interesting that there's still this massive, I mean, even with COVID, people are like, no, I'm going to the store because they're not sure they can get it anywhere else. They're literally looking for this stuff. And I think the post-pandemic world might drive more activity in the store purchase power, which I think does more for the Targets, the Staples, the Walmarts, the places where you go versus Amazon, which is just, it might sell from any of those carriers or whatever, but it's just interesting.
Yeah, definitely fascinating. And you know what? I actually had another topic here that I don't even know. I think we might have enough time to kind of slide this in, but this is a little bit to do with that brick and mortar versus the Amazon, online kind of a storefront, and what are some of the changes there? But really, what we've seen or we've been hearing about is a difference right now with social buying versus conversational buying. Ben, are you familiar with what I'm talking about here?
I did watch what you had sent me. Yeah, I did watch it. Yeah. But go ahead. I mean, this is really This is a very interesting topic for long-term investing for sure.
Yes. So social buying, what is that? That's the Instagram influencer that wears whatever or promotes this, that, or another. They have the link in their bio, and now you actually are kind of purchasing through them. And of course, they're getting what they get off of that because that's what they're getting paid.
I'm going to put an attachment to our blue. We're both wearing blue polo shirts, so we'll have to put those links in there. So
there you go. Yeah, you can go to the link in the show notes to find what Ben and I are wearing today. That kind of comes back to the dad shoes. I'm not going to show those, but you know what I'm talking about. The white tennies, right? That are the.
Don't even admit it. Just go on.
Okay. Then there's the voice or the conversational commerce, where this is the one that I think is really a fascinating piece, where people are getting a personal shopping experience, but they're actually getting like a Zoom connection to somebody that's in the retail store and, shopping with those people. And it's immediate. Like we're there with the technology and the integration where you're getting that personal experience, the customer service experience with somebody, and you can kind of shop through them that way.
I think that's a very interesting option for sure. I think there are two different types of buying styles. One is being in fashion, and one is making sure it's the right size. Like I can see, like if a piece of furniture, it says it's exactly this. Can you just measure it for me and tell me, is it exactly that, or is it a quarter of an inch narrower? Or, yeah. I mean, those are real questions people have. I mean, or is that blouse a little stretchy, or are those pants, do they feel a little longer than the other pants that those are all questions. Those are great. I think that a virtual shopper is definitely in line for our world for sure. I mean, not that I do clothes shopping really anyways, but this shirt's probably 10 years old, so you can't even buy it anymore. But
that's okay. You still go to the link and buy it anyways, folks. It's all available there for you.
It's vintage. I'm selling vintage clothing.
Folks, you have been listening to Money on Tap, and we've been having a lot of fun with the back to school conversation. Is there anything that you want to leave people with today, Ben? I know peace of mind is always what we're going for here, but what do you got?
No, I think the one thing I would leave people with, investment. By the time you hear this, investment is probably gone, right? But the conversation about having it, we're making investments, whether it's retail or something else in our portfolios, and we're managing that stuff beforehand. But it's good to know that this stuff is out there. It's good to know that there is a cyclical marketplace. There are opportunities to find value. All of those things exist. And, I would encourage people to just give us a call or give your planner a call and make sure you're kind of like in the edge of the market, and make sure that your portfolio is relevant and intentional.
I love it. Relevant, intentional, and appropriate, right? So those are some good words that we can use here today. You've been listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. You can also find us at Facebook. We're at /3D Investing. We're also on Twitter at BFG_LLC. And as always, you can also find us at yourmoneyontap.com. Thanks for listening. Thanks for liking our podcast. We appreciate you, and we can't wait to make it a great day and a great life with you here at Money on Tap.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.